Hello, everyone. Thanks for being there for the third episode of Investors in Web3, organized by Blockchain at HEC. My name is Olombel. I'm core team member of Blockchain HEC, and I will moderate this event today. On behalf of the club, I would like to give you a special thanks to the prime sponsors who are PwC and Stake Capital Group, as well as partners HEC Alumni, HEC Paris, and all the more than 100 speakers and companies that have already come to shed light to the Web3 universe. In terms of timing, we will have two blocks. The first block with 30 minutes presenting the different invitees, and the next 30 minutes will be more for Q&A. And so to come back today with today's topic, we are really happy to welcome Ilya Zuckerman and Gonçalo Reis from Stake Capital, which is one of the most famous fund in Web3, and Pierre Marin from Trail Capital, which is also famous, but more in Web2, especially on arts, luxury, music, or lifestyle companies. And today they bring the best of the two worlds by founding LAMS, so LAMS, which is a full Web3 fund specialized in luxury, art, music, and sports projects dedicated on Web3. So I let you guys introduce yourself more in details.
Good. So maybe we go with the seniority, and I go first. Seniority in terms of age.
Go.
Hello, good afternoon. Gonçalo Reis. I'm Portuguese, based out of Lisbon. Well, I mean, regarding my background, I've done a little bit of everything when it comes to business building. I actually started in consulting in Accenture in Brussels more than 10 years ago. But it was not a long-lived experience, because what was really exciting at the time when I was at Accenture was Rocket Internet, which probably the majority of you guys know. And I left Accenture, joined Rocket, and I helped them launch basically two of their businesses. One in Europe. I was city manager of a company called CTDeal at the time here in Portugal, and then I moved to Singapore. And in Singapore, we were launching Rocket was launching online fashion retailer, and during that process I got excited, got the business idea, and left Rocket to build my own startup in Singapore. Amazing experience. Unlike I could have gone into an MBA at HEC, but I did my own startup, lost all my money, which was very enlightening, but in the process I managed to meet a Portuguese guy at the time working at McKinsey, that was leaving McKinsey and coming to Portugal again to basically build one of the first VC funds focusing on scale-ups and in technology startups. And I joined him, came to Portugal, and we built first the management company and then a couple of funds. The first one was a fund, a small one, focusing only on investing on technology companies. And I did a little bit of everything, from setting up the entities and then operating, in fact, as an investment manager in the traditional Web2 sector for almost 5 years. And over the last 3, I was responsible for the go-to-market of an American company called Zinnia, and for the European go-to-market of an American company. I got back to the VC world, and in more particular to Web3, because my good friend Julian Butundu, which is the CEO of Stake Capital, has been, which probably the majority of you guys know, he was doing already a lot of investment on his own, I mean, as an angel mostly, across the whole Web3 space. And he called me, I suppose, to help him take this to the different level. And so at Stake Capital, I'm responsible together with Ilya for everything related to investments, both the existing portfolio and new deal flow. Sorry, you have to forgive me, I'm Latin, so I talk too much.
That's great, that's great. So maybe you, Pierre or Ilya, you decide.
I would, maybe I can go from there. I also work at Stake Capital, so it will be consistent. Thank you, Eric. Thank you, Gonçalo, for the introduction. Very happy to be here as a former, so I have a typical French background, engineering, and a former HEC. I also co-founded Blockchain HEC, but in the UK for HEC UK alumni who lives in the UK now. So I work very close with David, with Eric. So my background is the typical financial engineer, engineering school, HEC, and then I went to the US to study financial engineering. I worked in London for almost 10 years as a financial engineer, where I was structuring and selling derivatives and package them into certificates. We started also a small business facilitating pre-IPO solution, so very large tech companies like Uber, Airbnb that were not listed at that time, and selling those certificates through SPV to family offices, private bankers, or high net worth individual. We wanted to start a crypto business. It was not growing fast enough, and I wanted to go full-time into crypto. I have the chance to know Julien since a long time, actually. We were in the same high school. Yeah, so I joined him a couple of months ago, actually the same moment than Gonçalo, in order to help on the investment side and on the business development side. Maybe just a quick word on Stake Capital for the one who don't know Stake Capital. We are not a traditional VC. We invest our own capital, so Julien's wealth. So we don't have external money yet. We invest in pretty much everything when it comes to Web3. And we have also our own protocols, StakeDAO, Blackpool, and Rect News, that most of you probably know.
My turn, I guess.
Yeah.
Hi, everyone. Thank you very much for the invitation, Eric, and to HEC. I'm a bit complex versus you guys, as I missed HEC when I was trying it at business school. So I'm going to try to get the right level this time for the school. So briefly about myself, I started in consulting at McKinsey for several years, then joined basically two companies that I set up. One in education, which is Prepa First, that I sold in 2016, and another one in temp work agency, which is called Easy Work, which worked pretty well. We built it up in 2018. I was leading all the sales operations, which came from 0 to almost 10,000 workers working every day on the platform, and a bit more than 300 million euro turnover a year. I quit this company to set up with Trail the Web3 LAMS fund that I would be happy to present. So a few words about Trail. Trail is a European traditional private equity with a bit more than 1 billion euro asset under management, as you mentioned, mainly in consumer and industry, in several strategies across Europe, Asia, with our partner CICC. And we just announced a few days ago the launch of our new strategy on Web3, which is called LAMS, which stands for Luxury, Art, Music, and Sport, with the very strong ambition to support the best entrepreneurs in France and Europe that are developing Web3 companies within those 4 verticals. And we are very happy to do it with Stake, Julien, Ilya, and Gonçalo, to, as you mentioned, try to bring the best from private equity and Web3 in France and Europe.
Excellent. Well, thanks all of you. So many. And now can we go more in details of what your companies are offering? So can you share some examples of recent deals you made? What are your fundamental reflexes, your methodology, the tools or analysis you are doing before entering in a project? Can you also explain how you complement each other between stake capital and trail to especially on LAM's project? So you started to mention that, Pierre, but maybe to go more on what you're offering the both of you on this project. So maybe Gonçalo or Ilya on for stake, Pierre for trail, and after the mix of three of you.
Yeah, I mean, for the deals we are making, I mean, we are agnostic at Stake Capital. We are agnostic in terms of themes. If it's Web3 related, so we invest in NFT project, we invest in DeFi, we invest in layer 1, layer 2, tech, very tech oriented projects. So pretty much everything. What is, I think, important for us is that, as I said, we are not a traditional VC. So we deploy our own capital, and we like to invest where we can help. So we are advising almost all the projects where we invest. We have a very strong DeFi vertical. This is linked to StakeDAO, obviously, which is very big, and also due to Curve, which is, I think you all know Curve, the biggest decentralized exchange for stablecoins. Julien has been in the core team of Curve, so obviously all DeFi projects are very important for us, but also infrastructure in order to be able to build the protocol that will emerge within Web3. You need very, very deep layer 1, layer 2 solutions, cross-chain solutions like, I don't know, Wormhole, for example, where we are also investors. And this is also linked, I would say infrastructure is also very important for us, because this is also linked to Julien's background. He's a geek and a tech at first. So yeah, on the NFT side, we invest also in different projects, gaming like Sorare. We have been one of the first investor in Sorare, where we can build on top of Sorare, and we have people playing Sorare at Blackpool. So this is more on the NFT verticals. We own, for example, Mbappé, which is the most expensive player, I think, in Sorare. Yeah, I mean, I will let maybe Pierre talking more about Trail, and we are very happy to partner with Trail on this LAMS project, which is a bit more specific in terms of thematics, luxury, art, music, and sport. And we started to do first 2 investments with Trail, but I think maybe I will let Pierre discuss that.
Sure. Well, first of all, when we step back, let's say that it's super exciting. We are at the beginning of a huge potential of growth across, I guess, all industries, and it's only the beginning. So the main question we wonder as a team when we invest is, what is the next multi-billion-dollar company that we want to fund and support? And the good news is that there are many of them coming in the next weeks and months. Why are we lucky as French and European people? Is that, first of all, I guess we have the best talents. We can see it because of the different projects, the one of Sorare, the one of Sandbox, funded by French entrepreneurs, but also because I guess we have the unique savoir-faire, as we mentioned, in the sector like luxury, like art, like music, with very famous IP that we have here in France and Europe. So we have talents, we have IPs. What is missing today is funds. I mean, when we look at the classic growth of a company today, the first round are seeded by French European fund, and then you go to Exit Z and other American funds. So the ambition on Trail partnering with Stake is to make sure that the French European entrepreneurs with good projects will be funded all along their journey with French European capital. So then on the question how we do assess the companies, I guess there are two main criteria. The first one is the team. As it's a new evolving market, it's very hard to say what are going to be the use cases that are going to work. So we like to invest on ambitious entrepreneurs with strong track record. So that's number one. And the number two is basically what is the sectorial potential. So this is why we choose to verticalize our fund into 4 verticals, which are luxury, art, music, and sport, because we believe that those verticals are the ones who are going to drive Web3 adoptions to the larger amount of people. When you look at different tools in Web3, which is pretty wide, you have DAO, you have NFT, you have token, all of them have in common to better engage, reward a community around an IP. And so we decided to verticalize the fund to make sure that we can support this adoption of Web3, but also that we can create value to the investment thanks to the different connections that we have through our portfolio of companies and through our advisors in those verticals.
So lucky you, all the future unicorn are connected today or watching the video. So I think that's a really good moment to mention that. So going more in details about, so if we take the example of maybe people who are launching a project in Web3 today and they are listening what you say today, what would you say as specificities in investing in Web3? How do you invest basically in a Web3 project? Is it in using equity, token, hybrids, or do you use the same approach than Web2 VC that maybe more people have in mind as specificity? So what is basically your approach in Web3?
So maybe I take that one because I'm the only one that was in both Web2 and Web3. So being a VC, the fundamentals of being a VC in Web2 or Web3, they remain more or less the same. It's the VC or the private equity practice is a very well understood science, and in fact, if you can think about it as this is what we did in my previous fund when I was working at Alpha Capital, but this is true for any fund, American or European. You need to answer 4 questions, and you need to answer it in order, and you need to make a case, typically to an investment committee or to the management partner if you want to get the project funded. And the 4 questions which you have to ask in order are very simple. The first one is, what is the problem? Is there a market? Is there an inefficiency or an opportunity in the market, and can you size it and define it? Are there people already providing that service? Is there competition? So let's call this question number 1, market, competition, and so on. The second question is, does your product solution solve the opportunity that you just identified and sized? Yes or no? Third question is, if your product solves that problem, how do you go to market? Which channels do you partner? Do you go direct? How much it costs? Do you have some traction? And fourth is what you need to do it in terms of resources. Do you have the right people? And how much money do you need? And this is the basis of in what we see is called an investment memorandum, which is basically a science. Now, what is very simple to do in Web2, and typically takes a little bit of time and a little bit of brains to go and answer these 4 questions, but in general, you have at least for chapter number 1, you have a lot of data available out there. You can estimate the market sizing of HR management solutions, or I don't know, a payroll solution. Well, in Web3, the chapter number 1 is very difficult to define. We are the majority of the projects, they are still. I mean, a lot of the space is creating new categories every month or every 6 months. So in that sense, in Web3 as a VC, it's difficult to answer question number one. It goes you have to take a lot of assumptions there. So therefore, answering question number two of the product and the solution solves a real problem. Typically, in a Web2 context, you have two options to evaluate if the product solves the problem or not. Either you go and you ask existing customers if they are using it and why, or you have somebody internally that has the technical know-how to look at the product and assess whether the product is good or not. In the case of Web3, the first option is many times not available because many companies, they are still launching. There's not a lot of traction yet. So there's a heavy reliance on founders or people or builders, people like Julian in the case of Stake Capital. That is a builder that understands the tech, that understands the space, but it's not mapped anywhere. It's mapped somewhere in his head and by his empirical experience. And so we have a high reliance on typically deeply technical people that can go in and look at the product, look at the GitHub repos and look at the smart contracts and make sure that the thing is well set up, provided you believe there is a problem. But for me, the biggest surprise coming from Web2 to Web3, it was not, I was expecting the first problem for the first question. The second, okay, but it's there is a lot of immaturity in Web3 when it comes to go to market, and the majority of the projects we meet, they don't even bother to explain the route to market. There is very few teams that can articulate a proper go-to-market strategy. They don't understand some of them. They don't even understand the basics of lead generation and so on. So when we do find companies like that, they typically are teams that have done stuff before in Web2 or even Web3. I give you a couple of examples. For example, now we are investing in a company called Ethermail. The founders, they have sold already to companies before and so on. So we understand the problem. The technology is still maturing, but they have, I mean, from a go-to-market perspective, they have a machine that is already capturing the value, and they are getting already to corporates, to individuals, and so on. So, but for me, that was the biggest surprise, was the fact that the chapter number 3 in my playbook, there are very, very few companies in Web3 that can articulate this. I think the reason is more or less obvious, is that you have a lot of technical founders that they never took products to market. So that explains part of it, but I think it's also a function of not having yet enough teams from Web2 with experience in Web2, particularly on the sales, marketing, go-to-market side, jumping to the space. I think this is going to change dramatically, but it's for me was impressive, and a lot of the investment memorandums and the discussions we have internally at Stake when it comes to investing is these guys have no idea on how to take it to market. Product is great, but how are they going to do it? So that was a surprise. And then we came to chapter number 4, which is also well, not surprising, but it was worse than what I thought, which is valuations. The complete how should I say? It's a bit like the go-to-market. It doesn't occur to some of the projects we look at. It doesn't occur them to justify the valuation based on reality, right? It's just, well, no, seed round, the guys in the US raised.
So they don't know how to go to market, but they know how to evaluate their business.
No, to value, yes. Because no, it's your seed round. I have to do this another 3 times. I don't want to dilute more than 10%. So I need 2 million. It's 20 million pre-money. So that for me, I knew I knew that I was going to find something like that, but I was not expecting like sometimes so like this detachment from reality. So what does this mean? I think from a Web3 for a Web3 VC is you have to put extra emphasis on chapter number 2, which is the product and the team that is building it, and when sometimes we find some evidence of traction on some evidence on chapter 1 or chapter 3, it's an extra point. The other thing that I would say, which is I think it's transversal to all the chapters, and it's not really which is transversal to everything, is the general immaturity, emotional immaturity of the teams as well, because not only they are a little bit, they tend to be a little bit more technical from a hard skill set, but they tend to be a bit younger, and so and we see that even within the Stake Capital group in our team, they are overexcited and they are over pessimistic. Normally, and this is also, I think, very specific to Web3, and we have to, and so therefore, in our models, we need to, when there is overexcitement, we need to discount the future cash flows. So, but that I think it's transversal to all. I don't know if I answered the question, but I think
perfectly. I hope it gives a lot of insight for the people and the participants here. And so linked to that, by experience, what do you look for a good to make a good investment? So what's your criteria to take a decision after a pitch, for example? Or maybe Ilya, you can answer.
Yeah, thanks, Eric. Very good question. Gonçalo answered actually already part of this question as well. But the thing is, I would say to start the team, people undervalue their team clearly. We see many decks where the team is not even presented, or at the end, like you need to ask for it. Every VC, and this is true in Web 2, Web 1, Web 3, Web 10, it's we invest in people before investing in projects. So you need to present the team quickly in your I mean, it needs to be in the first couple of slides. It doesn't have to be the first one. You can explain the problem that you are going to solve, how you are going to solve it, but you need to explain why you have the best people to solve this problem. Because if you don't have the best people to solve this problem, then someone else is going to solve it with the best people, or no one's going to solve it because there is not a real problem. This can also happen. So first, the team. You need to explain really like the core team, what they are doing, their background, and what they are the right people. Why they are the right people to solve the problem. Obviously, second, I would say the problem. Some people are not solving anything, or they are over complexifying problems with Web3. So it happens often that we see people using Web3 because they will be able to increase the valuation because it's a hype to be in Web3, to add NFTs everywhere and so on. But you need to explain why using Web3, your solution is better than in Web2. By better, I mean faster, cheaper, trustless. I mean, somehow it needs to be better with Web3. If it's not really better with Web3, then it's not worth it. Obviously, you have the tech part, which is very important. This is also linked to I would say, to the team. You need a strong CTO. It's true for Web2, but it's even more true for Web3. It's very technical and it's new. So it's difficult to find good devs, to find people who have experience with building protocols, building smart contracts, and so on. So we insist a lot on the tech part, especially at Stake Capital, with a founder that is a real tech passionate. Also, when you an advice, everyone asks us obviously for money. This is what everyone wants, but no one asks for help. It's good to come to us saying we need a bit of money and a lot of help. It's actually better than coming to us and just saying we need a lot of money. We see very, very rarely people saying we need this amount of money, but we need a lot of help on finding other VCs, connecting to clients or potential clients, helping building the tech. We need your advice on smart contracts. So yeah, people ask for too much money and not enough for help. Another point on the valuation. So Gonçalo mentioned it. The valuation we see are from, usually people arrive and they skip all the steps. They ask for the money they need to build the perfect product, or MVP, not the MVP, but the perfect end final product. So they say, for that, I need 5 million. But obviously, if you need 5 million, you cannot value your company at 10 million because you're gonna be diluted too much. So you say, okay, I need 5 million, so my company is worth 50 million. And this is how we see people are building the valuations.
Yeah, but I was that happens in Web2 as well. The difference is that they will not pass the analysts, and also in Web3 the VC structures they don't have yet internally. We don't have analysts that understand both the investment process and the space and the crypto space. So it's overwhelming. So everything goes, you know, and this is what I was saying about the emotional immaturity, even within our team, some of the team in the investment team. If it's an NFT, it's going to the moon. Absolutely. So they put me on a call, they put Ilya on the call, right? And then we have a little bit more experience with it. So this is also connected to what I was saying before. There's immaturity still across a little bit, both on the projects, but also, to be honest, on the VC sides. We are still. It's really new indeed. I think Gerard, he made a very good question in the. So I think.
Should we answer the question now, or
no, maybe we keep it just for the final answer from, I think, from Pierre, based on what Ilya and Gonçalo explained. Can you just describe how your new fund will include in this strategy, and if you will follow the same insight mentioned before, or what is your strategy for your fund?
Sure. So once again, Web3 LAMS fund is a verticalized fund. So our strategy is very clear: is to support the best entrepreneurs within 4 verticals: luxury, art, music, and sport, because we think that those verticals are the ones that are going to bring the most value through Web3 adoption. But also, this is the ones where in France and Europe we have the best savoir-faire, and we think we can create and support those funds. Where I join, of course, Gonçalo and Ilya, is basically any company needs to have a client, and to have a client, being a professional or individual, you need to answer a need or a pain. And so the first question that we address is, to what extent that company through Web3 can answer a new pain. And so when you ask this question, over the last 3 months, we received a bit more than 100 decks to the fund. I guess that maybe 65% of the deck do not really answer this question. So that's a first filter. But an easy question is how Web3 going to make it better, more efficient, or in any kind of way going to answer a need of a professional or individual. So that's question number one. Question number two is, all right, so you have a market, you have the right idea. To what extent your project going to be the one who's going to succeed? So this is where we have a very strong due diligence on both the team and the business model. So how the company is sustainable and long term, and how the intrasec and the infrastructure is the good one. And so to make it happen, we do it obviously with stake. So all the companies that we're investing in are reviewed by Stake Capital on the technological assessments, and by our network of sectorial advisor for the sectorial potential. And so to give maybe to finish on that, to give you some examples, so we are very luckily investor on 2 new companies, which are Stage 11 and Beam. Stage 11 is music in the metaverse. So they've just announced a new concert in the coming weeks with David Guetta in the metaverse. What is absolutely amazing is the technology that they have done to build basically the whole metaverse, but also the singer or the artist, David Guetta, in 3D. So you're going to live the experience of a concert as if you were there, even though you are in Asia, US, Europe, or no matter the time zone. So that's pretty crazy. And the second one is Beam, which is a YouTube 3.0, to make it simple, which is basically how do you enable an influencer, it can be like a sport influencer or art influencer, to easily broadcast some content to a special audience leveraging NFTs. So that's the very beginning of the fund. The ambition is huge. We plan to do up to 2 investments per month. We are super.
Which size of ticket are you doing, for example?
So now we invest from 100K to 500K, mainly in pre-seed and seed funds. So as soon as we have a team and at least the design of a product and business model, we are ready to invest. And so very happy to talk to any entrepreneurs among the people listening to us today and others to see how we can support them. And also we are increasing the team inside of Trails. So we will recruit in the next months some new analysts and associates. So happy again to talk to any people who share our vision and ambition.
So if people want to contact you because they have a project in the 4th pillar that you mentioned, luxury, art, music, or sports, they have to contact you directly, or they have to contact Stake Capital first? How it works? How does it work, basically?
No, Pierre is the boss.
So they have to send you on LinkedIn or on email?
They can send me on LinkedIn. So the way we work is every 2 weeks, we sit down with Stake and review all the pipe. So either it can be from Stake and Trail, we share the pipe linked to the 4 verticals. So don't worry, any kind of connection, we go to the same discussion. But indeed, happy to receive on LinkedIn a chat, and then I follow up with the team on how we can.
And so you invest as a leader or follower in terms of investment, meaning if I have a 1 million project, I have a 1 million raising to find, you want to invest 100K to 500K, what I understood. Are you entering this type of project, or do you want to have the majority of the invest? Do you want to?
Not necessarily at this stage. What we want again is to make sure we can help and support the investment. So as long as we see a potential to support, we will do it. If we are the lead investor, happy to do it. If not, it's not an issue. I guess the strengths, especially for entrepreneurs listening at us, that at this stage is to have a good network of investors that are going to bring value. So happy to co-lead on or invest with other strong fund and BA as long as we collectively bring value to entrepreneurs.
Okay. And
And
just
on the stake capital side, on the
finish, Gonçalo, on the valuation part, you are on stake capital based on the recent market decrease, and so I guess the valuation decrease at the same level. Which size of ticket or funding are you seeing on your side for a new project which is launched today in Web3? What is the average funding needs you
yeah,
can
so the money we invest, in a way it's sort of like decoupled from the valuation, but it's more it has more to do with the stage at which we invest, whether it's a pre-seed and so on. But we are, in that sense, we are similar to when we operate individually as a family office deploying our own capital. Our average ticket also goes from 250 to 500K. The difference between us and Trail isolated or together is stake capital never leads. Because in order to lead a round, that is a serious business that only, I mean, you need a structure like Trail, for example, has. You need to be able to do, even when you agree on the terms of the investment, after the good practice is you have to do fiscal due diligence, legal due diligence to make sure that the guys have proper contracts, the entity is set up and so on. And that type of work, it doesn't suit, at least at the moment, the way stake capital is set up. So we always follow, even for smaller rounds and in earlier rounds. But this might change when we go together with the Trail, because with Trail we have a different manpower, right? We can leverage a lot of other resources, which stake capital alone we cannot.
Okay, so that's really interesting. So it means for the people who are listening to us is when they want to, for example, raise €1 million, they have to organize their roadshow to present their pitch deck to all the investors, but they have to keep in mind that they need to convince at least 2 to 3 to 4 funds.
Yeah, but I would say
they will put small ticket.
Yeah, but I would say come and talk to us if you want to raise a 1 or 2 million, because part of our job, and when we are interested and we see something that doesn't make sense, you know, like a company that is very good, but they want to raise 2 or 3 million at 30 million, but it's missing part of the story. They either don't have, the product is not live, or they don't have customers, or so on. Typically, and if we are interested, because this is also investment in that sense, what we typically try to do is to work with a team to see if there is an intermediate step between raising immediately 2 or 3 million at 30 million, or working with us, smaller ticket, smaller valuation, work with us, complete the story, like get the first customer, get the product out there, get at least some, and then going for the bigger round, right? Okay, so when I say we don't lead, yeah, when we say we don't lead is we don't lead a priced round. I don't know if you guys know the difference between a priced round and a round that you have either a future equity or a convertible note, but basically the difference is with a convertible note or a future token or future equity, you are not immediately setting the price of the round. You have a valuation cap, but you are putting money. The valuation is decided later on when you do a bigger round, typically with a proper bigger VC, and the VC sets the price of the round. So if it's early stage, if it's a safe round, we might even take a big chunk of what they are raising, because it's a little bit simpler to take the decision. But we would never lead, at least stake capital, we would never lead a priced round because that implies many other paperwork and so on. So what I would say is, if you are planning to invest to raise 1 or 2 million, probably you are wrong. So come to talk to us. If we are interested, we can find a middle term.
Okay, great. So it's good to know. It's good to know for the people. So maybe let's start by the Q&A.
And also, sorry,
Yeah.
just also say, because people sometimes don't understand the difference between raising somebody like Trail or Stake Capital. The difference between in early stage raising 500K, 600K, and go to work now and complete the story. I mean, get the product, get the first customer. By the way, we can help probably with both the product and the customer. But the point is, the time the founders sometimes spend trying to raise 3 million, it takes them 6 months if everything is well. We are in a bear market, macroeconomic conditions are difficult. People are sometimes like founders spend months and months trying to raise because they did a business plan, a financial plan, and then they fell in love emotionally to the Excel spreadsheet. And then nothing else works if they cannot fund that runway, right? It's crazy, right? So sometimes, and if we are interested, what we try to do is to try to slice the problem in smaller steps. And we like to get in as soon as possible because our ticket is more or less fixed. It's 250 to 500K. And in a smaller round, in an earlier stage round, we can take we can put more skin in the game ourselves for the same ticket amount than if it's too late or if it's a later round. Because then it becomes, why should we?
What I hear is you ask people to come back more in a Web2 mindset to raise money, to have
no, we just say, okay, there are unicorns. There are unicorns. I don't know, maybe there are unicorns. But there is still, there are, the gravity exists, right? So it's not a Web2 or Web3. These people are building businesses. Okay, they use a different type of technology and so on. If you cannot talk business, you have to talk business at a certain point. I don't care if you. Ultimately, the underlying technology, yes, we all believe that blockchain is going to change the world and so on, but you have to talk business. And if you cannot talk about the 4 chapters, you don't know how business works. Therefore, maybe you should not do business. I don't know.
Really clear. Excellent. Thank you, Gonçalo. So maybe we can start the Q&A part. So feel free in the chat to mention what you have in mind. Let's start by the Gerard question who said maybe for Ilya, do you have ideas in Web3 that bringing more more creative solution than the Web2 approach?
Oh, sorry. Yes, so it's a great question. I am thinking about one that is very obvious and I think very, very easy to understand. It's ticketing solutions. You have different already big players in that field. It's really easy to understand because NFT solves the digital ownership problem. So obviously with ticketing, you can have a lot of issues like fake tickets, for example. So NFT solves that issues quite well, actually. And it's a very, very strong and very concrete case. Then the blockchain itself is solving one very big problem with having wallets, for example. Everyone today with an internet connection can have a wallet, so can have, let's say, a bank account, money, which is not true in, it's almost true in developed countries, but in most part of the world, it's not true. Many people cannot open a bank account, which is a huge issue. So blockchain itself solves that very well. By allowing people with just an internet connection, having a wallet, having actually as many wallets as they want. in a click and for free.
Yeah.
Good example.
I share the opinion. I was just going to maybe broaden it a little bit more to mention that I think there are two categories that Ilya mentioned it, but for me, I think there are two very obvious that they will. It's easy to imagine how blockchain is going to change the game in that. One is the whole ticketing experience, but beyond just the ticketing, in general, the whole experience of communities around the brands and so on. But the second one, I think, which we have been seeing and investing in a couple of these projects, companies like Superfans, for example, which are French, is and by the way, this is a huge category in Web2, which is still unexplored, which is everything that has to do with the digital marketing, affiliation programs, referral and reward programs. It's very simple to imagine that all of this, that the Web3 projects are going to eat up this space. It's very, very simple because the NFT technology and what you can do on top of it is much more efficient than what you have in Web2 nowadays with the traditional referral programs and so on that you currently have. So we have a couple of bets in that space ourselves. Actually we passed one last week. It was a US, you see, it was a good example. US company, very nice. The space was correct. We liked, but the valuation was just too far away, and our ticket is what it is. So we didn't want it to get in. And in that sense, the Web2 Zen-ness, it's good. We have a little bit less FOMO than the general industry. It's amazing, it's amazing how sometimes the younger guys in our company, they come to us and say, these guys are raising, it's going to the moon. It's 100 million. It's 100 million pre-money. They are just raising 10 and they already have, I don't care what they have. I mean, I don't care what they have. I mean, 100 million in seed for, you see, but it's incredible. Like, this is what I was saying about the emotional intelligence. We as VCs, we need to take care of it as well. Be aware of it. Yeah.
So really clear, very clear. I hope it answers to Gerard. To finish on the valuation part, maybe Pierre, you didn't mention how basically you invest in the project. Are you investing in equity? Are you investing in token? Are you investing in hybrid the solution? So I think it's really important for the people who are raising funds, especially in Web3, to know on which side they will find some funds.
That's a very good question. So far we have invested in equity because the two companies we invested in were raising on equity, but the ambition is obviously to invest in both. So it could be either equity and token, equity only or token only, as long as the value created by the project is relying on one of those two, on the main asset between the two.
Okay. And on stake side, the same?
Future equity, token, future token, we do everything.
Okay, that's great. And to maybe on the market opinion side. So three of you, can you give us your feeling about the market? Because I think some people they don't care about the bull or bear market. They don't care, and some others are really confident because they said that's a good time to work on a really concrete project and to raise funds. But I know that other people can be afraid about this period. What's your main feeling about the market, the overall market?
I can start with some figures if you want, because just to step back. So last year we had 120 billion euro of fund invested in Web3, which is totally huge. So the normal trend of the market wasn't last year, but starting now. So it's normal that we have more sustainable and healthy basics today. The second figure I look at is basically when you talk to corporates. So McKinsey just done a recent report on that. 50% of corporate revenues are expected to come in the next 5 years from Web3. So corporate revenues, which is real business, is expected to grow massively from Web3. So the question for entrepreneurs is mostly how can I support this trend of creating value to corporates, no matter what, if it's a peak or a bear market, is how can I bring 50% more value to the corporates? Now, obviously, we are in a bear market. The big difference is that you cannot raise 10 million on a deck. So it pushes entrepreneurs to maybe raise less money, as Gonçalo mentioned a bit earlier, raise a bit less money. So a smaller team, maybe more focused product, make it happen, and in 6-12 months, raise much more.
Yeah, that's great because as you mentioned, I think people are more focused on the crypto price, etc. But what they maybe they miss on this part, and especially on the luxury art side, in the future we know that all the big brands will go to this type of solution, and especially on NFT. So the market is still really small compared to what we will have in the future. Now it's just to be maybe the first in the run, and to take the opportunity today to present a really good project, because it's still the time to present a project, especially on luxury or art.
In my head, I think it's a little bit the things are a little bit decoupled as well, in the sense that the conditions of the market should not necessarily influence the decision of a team of an entrepreneur or a team of entrepreneurs to go to market. I think because, again, if you go in order of the chapters, the first question you have to, I mean, if I was going to set up a company, the consideration of whether I can raise money is chapter 4. The first thing I would probably going to try to assess is there a problem worth to be solving, and can I build the product to solve the problem? And by definition, and because this industry is so new and is so incipient, right? But the scale of innovation and new things that are showing up are so much that I think there was never a better time to solve problems for this industry. There are a lot of problems to be solved with very obvious customers. We just had a merge on the Ethereum side. Like what that will do to the layer 2s and scalabilities and the problems that need to be solved there, and the use cases that are showing up. I mean, the NFT and the Green Monkeys NFT space collapsed. Of course it collapsed. It has to collapse. Thank God it collapsed in a way, right? But all the infrastructure, all the use cases, all the tools, all the know-how, they remain. In the ICO era, all of the tokens collapsed. Of course they collapsed. Thank God they collapsed. It was not healthy. It was toxic. But we got a beautiful thing, which is the tokenomics and people thinking about different ways of designing tokens and the governance and so on. So there was never a better timing to do it, by definition, almost to come to market. There is less noise. All of the guys that operate in FOMO are left. All of the degens are pessimistic. Never better for if you have a serious project solving a serious problem, you will have people, and the cash that was raised, it's still there. The dry powder is still there. Everybody's just scared. But if you come with a compelling story for solving a problem, don't worry. I think the money will come.
Excellent. Ilya, maybe just to conclude, because
I mean, I am a former, like, let's say, financial market guy. So if it's purely a market sentiment, then I am not very bullish, to be honest, for the next couple of months. It's time to build, obviously. The money is there, so we still invest. But I mean, you have to look at you cannot look just Web3 without looking at what happens in what is happening in the Web2 economy. So inflation and so on. So it's I'm not so optimistic, and obviously the crash was healthy. If we can say that the crash is healthy, or is it always healthy? I don't know. Yeah, it's time to build. It's time to raise money as well. But please keep in mind that when you raise money, raise enough to be able to last a couple of months, 1 year, 18 months, I don't know. It's difficult to raise funds. It's difficult, especially in a bear market. We see some people raising funds just saying, we are going to do another fundraise in 3 months. 3 months, you need to, in order to do a fundraising in 3 months, you need to start today. So it doesn't make, any sense to. And then they are not focusing on the project. They are running after the money, not focusing on the project, because when you raise fund, you need to focus on raising fund. So try to be a bit careful on that as well, I would say, because it's not easy to raise fund, and you don't want to raise fund every 3 months in such a market.
Yeah, so that's a really good message to conclude, because the funds are there, the money is there, but take more time maybe to focus on the why. How do you do that? Focus more on the product, think more smartly, how much you want to raise. I think that's a good message to close this meeting, and I think it will give some good advices for the people listening to us. I wanted to thank you to the three of you. It was really interesting. For people, they can, so how we said, they can contact you, Pierre, Ilya, or Gonçalo directly on LinkedIn. That's the best way, I guess.
LinkedIn or
yeah, if a Web3 guy tells you
Telegram,
send me an email, send me an email, he's not interested.
we are still waiting the LinkedIn Web3 version, but for now we'll say we're LinkedIn.
Yeah,
so it was really cool. Thanks to all of you who were there today and who asked a question or contribution. I hope that it will help you in your funding raise reflection. And don't forget that we organize a lot of next meetings with the club Blockchain HEC. You can subscribe to our LinkedIn page or on the HEC intranet. So you will receive all the next events that we organize every week. I wish you a very nice evening to all of you. And I hope we will cross each other in the metaverse or in real life. Thank you, everyone.
Thank you.